Now let's bring in Sarah Robak, contributor for the TD Ameritrade Network. Sarah, thanks for coming on. We've got all the eyes on Ulta Beauty as the company is set to report earnings after today's market close. What are some of the analyst expectations ahead of that report?
Hi, Shawn. Good afternoon. I think investors are really looking forward to this report today because in an environment where many of the retailers are struggling, Ulta has truly been an outperformer. Shares are up about 37% year to date because investors have loved what they've seen from this company. They've been able to robustly grow their revenues. We're starting to see some margin improvements, and they have plans to expand internationally. Also, in an environment where you see many retailers closing their stores, they have aggressive expansion plans. In fact, they plan to open 80 new stores in this current fiscal year. That last quarter, they reported 13% revenue growth. Same-store sales were up 7%. That was driven both by higher traffic as well as an average ticket size. But of course, with higher growth comes higher expectations, right? So earnings per share and revenues are both expected to grow 13% year over year this quarter. But headed into this report, I was taking a look, Shawn, at this recent report that was provided by Guggenheim. They reiterated their $375 price target on this stock, which offers about 12% upside potential, but they were trying to tame investors headed into this report, just saying that the bar is set high for them when you look year over year in terms of comp sales, because comp sales were 6.5% last year in their second quarter. They also mentioned that Q2 tends to be a higher investment quarter for them, so that could somewhat put pressure on the bottom line. I think also headed into this report, investors are going to want some more details on their Canada expansion, because all we know so far is that it's going to trim profitability in 2019 as they invest, and we'll start to see the benefits for that in 2020.
Then we also have Marvell, the technology company, not the squad of superheroes. We're going to be watching them closely after the bell, especially with some of the latest optimism for that China trade deal. What are some of the key metrics that we're going to be watching there?
Yeah, so shares of Marvell trading up nicely today, Shawn, along with many of the semis headed into this report. I believe they're up over 3% the last time that I checked. And despite some of the pressures that we've seen recently on Marvell, the shares are performing tremendously, up about 50% in 2019. Although they did have a beat last quarter on both the top and bottom line, they did trim their outlook slightly because of the Huawei ban, but they are indicating that Huawei has a limited impact on their revenues, just a mid-single-digit top-line impact. But the stock performance has really been based mostly on the 5G technology wave and really their leadership in the developments in that space. In fact, they had 2 large design wins last quarter. They announced a long-term partnership with Samsung, but they mentioned that we won't start seeing the effects of that until the tail end of 2019, and that it's really going to ramp up in 2020. So heading into that, I think we're just going to have to be able to deal with some softness. In fact, earnings per share is expected to decline significantly, 15 cents for the quarter versus 28 cents last year. Revenue is expected to decline 2%, but all in all, based on the long-term prospects in 5G, analysts are pretty bullish here. The average price target is sitting at about $28 compared to the $24.25 that the stock is currently trading.
Awesome. Thanks for that preview. We're going to have to leave it there. That was Sarah Robak, contributor for the TD Ameritrade Network, coming to us from Omaha, Nebraska.